A lot of cybersecurity policies now, they're essentially what they're doing is they're getting wise. They're saying, well, this is a policy I would have written maybe 10 or 15 years ago. But today, now that those threats are becoming more real and, and they're having to pay off on them, they're starting to say, okay, Mr. Consumer, Mrs. Consumer, what are you doing to protect yourself? Before I underwrite you on this, what plans do you have in place? And well, it's not so much a decision on whether or not you're going to be able to get coverage in a cyber incident. It certainly will affect your premiums. So that's important to keep in mind as well. There's some underwriters, depending on your security platform, will make changes to coverage on things like lost revenue. So that's important for folks to see when you're reading through your cyber security documents or your cyber insurance, as you have different fields. So you might have a field for recovery of assets. You might have coverage for something such as manpower or labor force costs. You might have coverage for things that are soft assets like software, or if you're in a business to where you're creating your own intellectual property and you're not using necessarily COTS software. But there's another one that people often overlook, and it's a loss of revenue. So if I'm down for 30 days over an incident, how do I recover that 30 days of revenue? Most cyber policies that we're seeing today have a window of about 8 to 12 hours of lost revenue. So that means to those companies, if you can't get back in business in 8 to 12 hours, then you're on the hook for any money that you've lost during that time period by being out of production. We need to be diligent in our programs and our practices going forward to make sure that we're all going to have a successful next year.